Hello, everybody. Welcome to the December edition here, December 2023 edition of the market update. And today we're also going to talk about non-energy costs. A little tutorial on that. Really, hopefully informative for most of you. We get a lot of questions on this often basis where people don't really have much of an understanding and knowledge of this. So we're going to give a kind of a nice viewpoint of that. We'll let a few more people join up here. Here we go. There's some issues with the link and people logging in here. We'll give about 30 seconds and we'll get started. All right, well, my name is Scott Ebling here. I'm Director of Pricing and Strategic Solutions at Broker Online Exchange. And with me today is Ellie Coldaway. As always, she's the manager of the pricing. She's Strategic Solutions team. Oh my God, I tried to practice out messing that tongue twister up, but it did not happen today. All right, so today we're going to be talking now about tutorial about our box, talk about box a little bit, and some of the great things we do here and things that are coming up, and a little market update. Some interesting stuff here. Definitely a big changes in the market and the prices in the last month. And we're also going to have a non-energy cost tutorial about the kind of components, capacity, transmission, RPS costs, ancillary, all those fun things. So I'm going to give it to Allie here to take it away and talk about box. Go ahead, Ellie.
Awesome. Thank you, Scott. And thank you, everybody, for joining us this morning and all of our webinar mornings. It's our last for the year, but this is one of our favorite things. We love to do these webinars. So a little bit about Box, just in case you aren't registered with us yet, are curious, or maybe a partner who hasn't run a deal through us in a little bit. Let's reintroduce ourselves. We are the ultimate commercial energy brokering partner. So Box provides independent energy brokers and affiliates with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts. Box has become the largest network of energy agents, brokers, and consulting firms in North America. We connect a variety of diverse energy partners so they can each benefit from streamlined, efficient options in deregulated natural gas and electricity markets. You can see a little bit how you can scale your energy business nationally with this map. You'll see green options for natural gas only markets. You'll see blue where we have both power and natural gas options available. And then you'll see a lot of gray states. The United States is deregulated nationally for natural gas, but these markets in gray have limited availability. Usually it's large commercial and industrial customers in these markets that may have opportunities. Sometimes there are a few additional requirements, but if you have opportunities, if you have customers in these markets or are interested in approaching these markets, reach out to your account manager and see, let's start asking questions. Let's start exploring those opportunities. We're always happy to take a look. Another benefit of partnering with Box is our supplier network. So you'll see a lot of names that you recognize on here. Zero NRG, I want to shout out Champion and CPV, or Competitive Power Ventures, one of our newer partners. Those guys have done great work for us all year. We are really grateful for our supplier network. I think that's going to be a theme of this webinar, just since the holidays. We're just saying thank you to all of our partners, truly. You'll see a lot of names that you know on this list. We also partner with a network of smaller suppliers that offer really regional, local, niche expertise that we depend on for those markets. We have great resources with these by way of these suppliers, and we have great relationships with each of them. We're happy to put those relationships to work for you and happy to offer your customers a lot more options in terms of products, suppliers, different component treatments, but we'll get into that in a little bit. And then the other piece that I want to introduce here is Box's strategic solutions team. So in addition to building an awesome platform and creating supplier relationships, providing different types of commission structures and all sorts of back office management and administrative support, We also have our strategic solutions team. We've reviewed Utility Data Box, our usage and analytics and budget reporting platform. You guys know from past webinars that we do contract analysis and negotiation. We'll also talk a little bit about that later too. If you guys have customers in the public space that need formal RFP management execution or energy sustainability strategy and benchmarking, someone's looking to go carbon neutral or get a handle on their carbon footprint, pursue some ambitious ESG goals, as I know some of our larger customers are, we can help with all of that too. We have built pricing models. Our team here has a ton of experience in the retail energy industry. And we're here to offer up all of that knowledge in support of your work, in support of your customers, to help everybody win together. We also want to shout out, oh, okay, I think maybe I'm a slide off, but that's okay. I'll pass it back to Scott.
You want to talk about Lubbock?
I was gonna.
Okay, yeah, I moved the slide. It was a slide from last month, but we can definitely should talk about it. Let's go ahead, Ellen.
Sure. So in addition to that nice map that we saw, we also wanted to just tell everybody on this webinar, if you are interested in working in Lubbock, please contact us. Please contact your Box account manager, account executive. We have options in that supplier market. We are keeping a pulse on it as it deregulates and opens up for shopping. So if you have customers there or are interested in deploying a sales force there, let us know. We're happy to help with that effort too. And with that, I will send it back to Scott for our market update.
Thank you, Ellen. Appreciate that. That's great stuff here. We are here to service you guys, to help you shine and close deals and look great in front of your customers, but also really provide, more importantly, not just look great, but really actually provide genuine great service to your customers as well. So let's go to market update here. This is, we talked about this, I think, starting in mid-February, mid-March area, where we say like, okay, it's going to be range bound between $3.50 and $4, and it was all the way through October until really you're going to see there, hey, we're going to have early signs of winter, or it's going to be, which would basically move it up to over the $4 hump. Oh, we're going to show signs of potential, or just kind of like average normal weather to this slightly colder, which probably kept in range, or the other scenario, basically an extension of fall, which we had, and it's continuing, and it's just dropping. And not only did we break 350, but now we're, practically breaking 250. And this is not front month, this is actually the winter. Winter sort of as far as the trading community goes, as far as the initial markets go, it's pretty much considered like, yeah, nothing, it's gonna be non-event as far as any sort of issues with supply or with storage and supply and everything being available. And in fact, they're starting to reduce price the next winter. But so how do we get here? Look at this. This is now reason why we just accelerated this is because these forecasts continue and they look like this. And this is hitting into the much above normal spots for the eastern big population areas, eastern part of the country, but really the whole country. The whole country is, except for maybe Miami's normal, but Miami normal is in the 70s. So, but New York, Chicago, everything. And what does this mean? It means basically that, it's basically like, fall continues, and it's going to be Christmas time is pretty much not going to be a white Christmas. In fact, as this picture shows, it's going to be maybe Santa Claus will be visiting you in some shorts and a t-shirt. So yeah, this is continuing on, and this keeps going. Here in Chicago, for instance, I know they're saying it's going to be potentially low 50s on Christmas. And I've kept my lawn furniture out. I've kept my bonfire pit ready to go. And it's looking like it's going to be a nice outside time. Christmas time is going to be great. I'll take it. Anyway, so moving on here. Down big throughout the curve. If you look at this here, this is the front all the way going through, so January 24, all the way going through December 26. So really 3 years of the curve. Last month we showed this, we showed the movement was more in the front. This is pretty much, it's a big down move throughout the curve. Everything's moving down. You have winter gas even in 2025 with the 450 range. In last year, now it's under 4, it's at 375. So a huge move there, 24, 25, it's all throughout. In fact, if you want to look at here, here's the energy market price update. 348 now we're trading in 2025, down to 259 for 2024. This is the entire calendar year. You look at all these in ComEd's now all throughout the 30s, throughout 24, 25, 26. These are the big moves we've had: 76 cents, 63, 47 for 24, 25, 26 in gas. Big moves in West Hub Power, Zone G, NEPOOL moving down. Really, both those are kind of like can be somewhat constrained gas areas. So it can be more tied to European gas, which is down from $16 to $10. And the whole world is kind of, the prices are kind of coming down a little bit throughout the world. We're gonna get into that a little bit. We've got some stuff we'd like to talk about there a little bit later on. PJM index prices are showing a little pulse though. A lot of it's just because as this time of year, you have some shutdowns, planned maintenance at plants, and so a little less supply. But right now in December, we're actually in the 20s, we're averaging in 20s again already so far in the first half of December. But you can see here now, 5-year average now is 38.79. If you look at this D's here, last year we hit 90. If we get in this 20s, this 5-year average is gonna be down to like 37, but very more importantly, this 12-month, last 12 months, for 12 months, which is around that, just about $38. That's probably going to shift down to about $36, $37. We'll be seeing on the index for that. And with that, here's a forward curve. So you see we're definitely well priced. If you look at that 44, 48, the average price of gas in the last 5 years has been around 345, 350, and index prices are 44, 48. So we're really kind of overpriced here. We believe we're overpriced here in PJM West Hub by $4 or $5 on the power price. We got a little edge there, and compared to currently where gas is at. So, and ERCOT North, similar story. Although the prices are definitely coming in lower here the last couple months. And roughly speaking, last 12 months of 58.87. A lot of that's really due to that August we had, that bang on August of 260. If we take that out, normalize that out to say like a $60, we're averaging $42 the last 12 months. Prices here, of course, they're backwardated. I mean, the prices are going lower throughout the curve. That's really because of the generation that's going to be coming online there. But if the weather just continues like this, we're going to continue having index prices probably in these 20s and $30 range here throughout the winter. But you never know what can happen. Winter Storm Uri came in February 21 off of a relatively mild winter. It doesn't mean that we can't have cold spells, and we have a big cold spell that can just change this overnight. So winter and summer are very dangerous times to be an index at ERCOT. Just to manage your portfolio correctly, make sure you can turn off if prices scoot higher, if not, get more on that index or a hedge kind of program. Gas storage, very healthy levels. In fact, we had an injection here a few weeks ago, the latest injection we've had, I believe, in 15 years. So a year, and this is just looking better week by week, and we're kind of like, on the more higher end of this range, you're near the 5-year max. We expect storage, if we have a normal winter from say from January on, like the last 2.5 months of winter, we're expecting storage now to probably hit around that 2 to 2.1 area if that happens. So that's going up by the day. Worst case, we have a much below normal. It's probably going to be 1.5, 1.6. So that's why gas is just giving up a winter, because the risk is out of the table. Future LNG export growth, boom. We talk about this all the time. Look at all this growth here, but and we're going to have productions, you have to make up for that, and it's kind of, the pipelines are definitely getting there. Production, definitely has been increasing. Some issues with that. But the one thing I want to talk about here is just how all this LNG export growth, there's export growth throughout the world, is that one of the other things we're kind of like seeing out here in our analysis, and we showed this slide last month, and is that there's a potential a lot on the horizon, and this is the global supply increase, this is the European demand increase. And Asia demand as well is going to increase, but it's not going to be, it's going to be probably another 30, 40 BCF. So we have a huge influx of global LNG that's going to be coming online, and we're trying to figure out, is there enough demand to make up for that? And then whose prices get kind of cut more and into. So I always like to say how there's going to be a convergence here on prices, and let's just say we're at $3, $4 here for term gas here in the United States. European gas is in the $10 range, Asian gas in the $15, $16 range. It costs money to ship. Okay, so add a couple bucks to that. So there's going to be a convergence down. I think it's going to be more closer down to converge into more of the American market pricing. So, but at the same time, we'll have an increase as well because of this. But there's a on the horizon. It's not going to be a shortage here of gas being able to kind of ship out and get out. The other side of it too is production is trending higher. This is very much a surprise to a lot of people, including myself, how much we've had an increase here in November, and December's even higher here. Right now, we're averaging close to 105.5. This is another thing that's just causing this big downfall in gas. A lot of this is coming from some associated gas in the Permian Basin. There's also a lot of what's called drill uncompleted wells, called DUCs, D-U-C-T, drill uncompleted wells that are just kind of that are coming online. It's like inventory, so to speak, that have been drilled and they're just kind of like capped and ready to come out to the market. Now they're bringing them out. And that's why, kind of production is coming a little bit more, despite the fact that, of course, the rig count is just holding steady down here. It's just holding steady at these levels here that we've had on this big decrease we had over spring and summer. And since September, it's just kind of been holding in this 115, 120 area. There's a lag in this usually, which, of course, obviously drill uncompleted wells, eventually there's not going to be much of those. So we do expect production to potentially decrease sometime soon, but that decrease is probably going to be down to like the 103 to 104, 102 to, I say 102 to 103 area. Probably sometime late spring, late winter, but that's, we're going to have to make up for that. And it's, the demand side is, we'll see if that comes into fruition here or not. And finally here, historical natural gas prices. Now this chart here, I love showing it because it kind of shows the reward, which is very little. This, be gas or power. Power is, basically a derivative of gas in a way, because gas is for the margin of fuel for most power. So this is it's 259 now, next 12 months. And so those are the next power or gas the next 12 months. And you're like waiting. There's not many, if you look at the reward side, there's not many cases here really where it kind of shows up to where it's, except for the COVID pandemic recently, where it's going to be down below those levels where we're at right now for a long period of time. So, really, if you're short over the next 12 months on gas, you definitely should be buying. If you're short power, because the power is overpriced of gas, I'd hedge at least 50% of that. And except for Texas, where there's more risk, and you got to value your risk reward situation and ability to cut if need be. And so anyway, be disciplined. Customers not taking a long position, you're covering a short position. We say it all the time. We'll say it every time this webinar. It's very important to remember that this is a volatile market, and it's a dangerous game to be short. So I will now pass it on to Allie, and she will continue on here with a great discussion here on that energy costs. Go ahead, Allie.
Awesome, thank you, Scott. Yes, lots of nice downward movement in our prompt year. It's an awesome time to lock up those open positions if you have them. going into our component costs, we've done a couple deep dives on custom pricing, but we want to focus this webinar on non-energy cost components. All of these non-energy cost components are costs that are associated with the cost of generating, transmitting, and producing electricity supply. So right here, we have a component costs overview. And I love these charts, number one, because they are all of our colors, but number two, because they outline really clearly just how much of a customer's per kilowatt hour supply price goes where and why. So you can see in each of these charts that the cost for energy, the actual electrons that are flowing through the lines that power our lights, all of those are here in green. It's always a big green slice, but in just about, it looks like in New York, it's just about half of that pie. In PJM, and we used Massachusetts because components are different across New England. Really, these are the markets where we focus. In PJM and Massachusetts, you can see that that energy cost is less than half the pie. And really, I wanted to show these charts just because these cost components are substantial. If they're not in the fixed price on the customer's contract, that doesn't mean the customer avoids that cost. The customer will still pay that cost. And it's important to understand that the customer will end up paying for each of these components. It's just how they end up paying for them, how their costs are calculated are things that really we delve into on the strategic solutions side, and here in our own pricing models from the pricing desk at Box. We'll go into each of these components a little bit, but I don't want to read you guys definitions necessarily. So Scott, let's go to the next slide and go through some component details. We have energy, we have capacity, we have transmission, we have renewable portfolio standards, losses, and ancillaries. So these are the big buckets into which those costs fall. And you'll see a little bit more information here. We've got a handout at the end of the webinar that you guys can read through. If you guys are interested in delving into exact calculations on how these charges are calculated, they will change depending on the regional transmission organization or the independent system operator. They will change depending upon the utility and the state's rules and requirements. There are a bunch of regulatory entities who basically determine all of these costs in terms of how they're treated and keep track of all of those numbers. If you're interested in looking into more detail, I highly recommend contacting your account managers so that we can delve into the market that you're interested in. This is the kind of stuff that Scott and I will nerd out about all day. And so but I know that with customers, sometimes customers don't understand that there's a lot that goes into an electricity supply price. It's not just the actual cost of, it's not just the cost of the electrons. We have these other slices of the pie that are significant, and it's important that your customer understands that they're going to have to pay all of those costs, regardless of whether they're fixed or passed through, and that we can help them manage those costs, or we can optimize the way those components are treated under any given retail energy agreement. One of the big value propositions of retail energy as a whole is that you get to choose how each of these components are treated, whether you want to pass them through, if that's beneficial to you. If you're, for example, working on your capacity tag and you're able to adjust your facility's behavior, that's something that you should absolutely pass through capacity. If your capacity tag comes down, then those costs will decrease. And if you're able to alter facility behavior, etc., that's something that could really benefit you. Those are the types of things that we're looking at whenever we're reviewing all of these components and making a recommendation as far as a product structure that will benefit a customer. So first and foremost, understanding which components are included in the contract price and which are excluded is absolutely critical. Like I said, one of the biggest values of the retail energy space is the ability to choose how you want those components treated. The utility, most utilities have a default treatment, and they, but they're going to do what's best for them, not necessarily what is best and most beneficial for a specific customer who's trying to manage their costs. A piece that we'll go into here is in terms of boxes value. Even if a component is listed as fixed, suppliers may still be able to make adjustments throughout the term, depending on the contract language. This can be in the component breakdown, where you have lists of how each component is treated and expected to be calculated and billed. Usually that's in the fine print on your terms and conditions or on your transaction confirmation documents. Components can be either listed as fixed with a bilateral annual adjustment so that suppliers are able to adjust the cost of that component and thus the customer's cost per kilowatt hour annually as they receive new information from the utility or from the regional transmission operator. Or if there are unexpected charges or if there is a change in law, change in regulation, which happens all the time in our industry, then suppliers are allowed to make adjustments to the price midterm if the customer is going to put, if serving the customer is going to put them underwater. Keep in mind that these suppliers take a financial position on behalf of the customer in order to fix those costs, and the customers reimburse the supplier over the term of that contract for any positions that they've taken. That's how they fix those costs. So if the supplier, took a bad position and gets underwater because of a specific customer due to a regulatory change, they may pass through the cost effects of that regulatory change to the customer if the contract allows them to do so. Passing through costs could work to the customer's benefit or to their detriment, depending on the component and depending on what the market's doing, depending on pending regulation, not registration, depending on pending regulation or different interpretations of the rules. We've seen a lot of changes in the regulatory space just this year. So that's something that we're mindful of. We're looking at it every day. Every customer is different, which is why I say if you're interested in delving into any individual customer, any individual market, reach out to us. It's something that we really like to do, and I think can put people who don't work in the industry to sleep a little bit. So we're happy to do it and examine exactly what will be the most optimal treatment per component per customer. So to that point, Box can analyze, make a recommendation, and negotiate specific contract language in order to optimize treatment for each component. A fixed all-in rate should include all components, but other products can be very beneficial for the customers. So in terms of making an optimal recommendation, analyzing the customer's load, how they're using their energy, and what their future goals are. Is this customer looking to go green? Are they making facility changes? Are they improving their building's efficiency? All of those are questions that we can help plan for. We can facilitate that conversation between the customer, yourself, and the retail energy supplier to make sure that, like we talked about in the beginning, everybody wins. Scott, do you have anything to add to that? I think that really covers most of what we wanted to talk about.
You covered so much, and that's great. And I just want to emphasize how it's really important to understand contract language. And we have people on our team here, including myself, that have written some supplier language, and I've analyzed almost every supplier's contract through the years. One from working as where they were competitors of mine, and now as a consultant side. I think it's so important to understand because these contracts can be completely different between suppliers, and it's kind of tilted so you don't, like any contract, that you just see the headline part and you kind of like make assumptions, and but which really is, of course, in the details of them. And suppliers, it's all about getting deals closed. We're not trying to say any suppliers are trying to be shady at all, and they're not. They're just, it's language is language. Now, I would say most suppliers have language in there where they can make adjustments if there's new tariffs or costs, the tariffs go up. And to be fair to suppliers, these are costs that can't be hedged. And if you can't hedge them, it's really, you can't fix them. I mean, you can't hedge the fact that, PGM may come out with a new call, or like ERCOT did this year with a new ancillary cost that's going to raise prices a few dollars. You can't hedge that out. These suppliers have very little margin, especially when we're on the other end of the deal negotiating, and we try to get those costs down as much as possible. And this could bury a deal, bury a company if they can't pass on some of these charges. So, but it's important to understand that and recognize it, understand that use is your advantage, understand to get contract terms and make it more unilateral or bilateral instead of unilateral. And we're here to help with all that. We take pride in this kind of work we do. So I guess moving on here now, any questions we have? I think we see one here, and that's just basically what our view is on PJM capacity going forward in the auction and next auction. Next auction is 25-26 auction for plan year 25-26, which would be for capacity starting in June 2025 for that year. I mean, I'll tell you, these capacity prices are super low. Everyone knows it. Everyone's trying to find ways to get it fixed. We do see capacity prices going up. And that's something that can potentially be fixed. It can be potentially be hedged. It often is not. There's a bit of premium to that, to have it be kind of more locked in. I know some suppliers that do that, and we can work with you on it. But for the most part, they're not. So if you have a contract going into, say, 2028, you have a couple of years out there where capacity price being used is these low prices right now. So those can go higher. But yeah, we expect them to go up, and they could double, which for an average customer could be, difference of $4 or $5 a megawatt hour. Could triple. I don't know, but doubling and tripling. I mean, we're at 150 and now we're in the 40s. So doubling and tripling still is below kind of where it was a few years ago. So we fully expect it to eventually go higher.
We've got a really good question that we just saw come in. With companies who use matrix pricing, i.e. those under 1 million kilowatt hours a year, are the non-energy costs negotiable? That's an awesome question. And there's kind of two answers to it. Yes and no. They're not necessarily negotiable from a contract language perspective. Matrix customers are matrix customers because they are small and because suppliers have figured out a way to really optimize the transactional process so that it's time effective for everybody involved to get a contract in place, get that customer enrolled, and serve them. I don't know that suppliers would necessarily make a change. If a supplier were to make a change to their matrix agreement, they would have, if they do it for one, they have to do it for everybody, right? So in terms of actually negotiating that specific customer's contract component treatment, that type of contract language, that's not necessarily something that would happen unless, we found something in a matrix contract that we said, hey, that's not going to work for any customer, for any business, and we just wouldn't use that, that supplier's matrix unless they renegotiated. But we would do it on behalf of all customers with that supplier in that market. That said, most matrix pricing is fixed all-in pricing. Some of it has bilateral annual adjustments. Some of them don't. Reading the contract, again, as Scott said, is really imperative. But the other thing that we're working on is being able to offer more products under the matrix structure, being able to offer energy-only products for smaller customers who don't use 1 million kilowatt hours, but maybe are looking to decrease their capacity tag or looking to go green or different things like that. That's actually something that we're actively working on, is getting more products available via matrix pricing, via our proprietary platform, MSC, which is awesome. And in that sense, offering the customer the right product, we'll have more options to do that. And if you're interested in offering something that isn't a fixed all-in, if you think you have a customer where a different product could possibly benefit them, then we welcome and encourage those conversations with your customers. And we would love for you to contact us, and we can brainstorm and talk about it together.
Excellent. All right. I think that's all the questions we have right now. And we just thank you guys all. Everybody have a great holidays. I know in the middle of Hanukkah right now. Hopefully you're enjoying the time with your friends and family there, and everyone else enjoys their time with Princess family and their holidays they celebrate. And this great time for, just talking to my team about this, it's a great time for just reflection on the year and kind of setting targets and goals for the next year, but also just enjoying your time with family, friends, and having gratitude for everything that's here. And we have so much gratitude for all you customers out there, and not, for one, just being great in this, the business that you guys do and the service you bring to these customers makes our day every worthwhile. But we all have fun doing it too. Really enjoy all you. Have a great day. We're here to serve you. Get in contact, any questions you have, any service you need, just get in contact with our pricing desk here, and we'll be happy to help. Thank you. Have a great day.
Thank you, everybody. Happy holidays.